Morning. New highs for the market. You have been saying that valuations are so high that it scares you to put fresh money to work at current levels. But what do you do in a scenario like this where liquidity just keeps trumping valuations and markets keep making new highs?
Yeah, it's continuing to kind of baffle us, but we just can't fight the momentum. So all you have to do, Anuj, is keep your hedges reasonably high. We saw last month that it's only a blip, in your eyes, I'm sure, but we saw a little bit of damage in the kind of middle of the month, particularly along the kind of small and mid caps. So that's the kind of damage that can be done if something untoward happens. So, what's happening globally is, liquidity continues to be king, and it just pushes markets to new highs. But, I think if you look around, particularly if you look at, say, the Dow, it's being pushed up by very few stocks. So the kind of breadth is not there. That you would have expected as you hit new highs. So, and I think it's starting to happen in our market as well. So the day of reckoning is coming, but we just have to wait for that to come through. And there's lots of negative news out there, which we just ignore. I mean, globally, what Trump is doing with the Paris Accord and now trying to get a travel ban is really saying, listen, we're on our own and we don't care about anybody else. So whether that brings protectionism fears back, I'm not sure, but it certainly would brings it back to my mind. And here in India, GDP growth is slowing. I mean, the finance minister said it wasn't demonetization, we were slowing anyway. I mean, that's a scary thing to say. And with GST, about to kind of be implemented, and our channel checks show that everyone's starting to destock. So I don't see earnings being the kind of the boost for the markets that we need. And if I look across all, some of the sectors like pharma, IT, telecom, power sector, PSU banks, I mean, those, to make up a large percentage of your index, are under huge amounts of stress. We're just ignoring it because liquidity is running our minds at the moment, but I suspect we're going to be haunted by some of these sectors going forward.
Yeah, that could well happen, but at the moment, if...
Andrew, hi, good morning. Just a little more in detail about pharma. You think that some of these opportunities could be looked at the moment, or as a sector, this underperformance could continue?
Pharma is entering the phase that IT entered a few years ago. The growth story is over. So they might get but 2 years to get your plant correct is like a huge amount of time. So we're just clutching at straws because they're just going to enter a very intensely competitive marketplace. So again, I think the whole model for Indian pharma needs to be re-looked at, and it's going to be very painful for them to do so. So again, I've no need to be in pharma whatsoever, and if anything, you'll get these kind of little pickup in the share prices and a bit of good news, but fundamentally, I mean, and the way I'm going back to fundamentally, the kind of growth is broken, and that's what you're going to have to face for the next few years, and valuations will have to come down from here. So it's going to be a derating, a bit like the IT sector.
Okay. Then what do you do? You've got very good arguments what will trouble stocks that are available at lower valuations. And for the others, the problem is the valuation. And yet the market is climbing. Andrew, what would you do at such a time? At least board on to the high valuation stocks?
Yeah, I mean, that's where, it's hard to kind of swallow some of those valuations. But, as you know, we became very bullish on the FMCG stocks, mainly because of GST. Because now we can see, double-digit growth in the next few years, which you haven't seen from these companies for a very long time. So this is the new growth area, and the ex-growth area is where you're going to get the switch from IT, pharma, and telecom for some more time into these sectors, which is why that they are heavyweights in the indices as well. And then with the private banks, well, you don't need to look anywhere else. They're going to continue to take market share away from the rest of the PSU banks.
Oh yes, for long as you have been betting on HDFC Bank, and that's a bet
Still
which has
playing, yeah.
still played out for you, Andrew. But what about auto names? We have seen sales data, a bit of a mixed bag, but rural economy facing companies have done well, the likes of Hero MotoCorp, even TVS Motor. Do you take any bets here?
Yeah, we have, and it's actually in one of those stocks, and one of the larger four-wheeler companies in terms of the autos that we're playing at the moment. So we think the way we want to kind of think about this sector is obviously just pick one or two from each of the kind of two-wheelers and four-wheelers, and we're also looking at that global growth will pick up. That's our base case, and therefore obviously like a Tata Motors, which is well entrenched in European and US markets, would be a big beneficiary of that global growth scenario. So those are the kind of companies which we like within the auto sector. And auto parts is something we're getting a little bit more interested in, but there's a few problems there which we just want to see how they play out in the near term. We're a little bit worried about GST, and I think this is going to affect the sector in the very short term.
Okay, what about NBFCs, Andrew? I mean, they had many things going for them, cheaper wholesale finance, as well as this entire affordable housing boom expectation. Is there value there?
So we've looked at the affordable housing sector and kind of fast forwarded to what we think it might look like in 4 to 5 years' time. So the housing finance companies is the kind of sector which we're looking at. Identified our companies, and we like what we see. So I think we're going to put, apart from the private banks, I think housing finance companies is where we're going to place our bets going forward. We think it's going to be a huge sector, and this is just the beginning. So very bullish on the affordable housing, but particularly housing finance companies.
Okay, well, since we have just a couple of minutes left, Andrew, I wanted to ask you your view on Wenger now that he's in. I know we had this discussion the last time we spoke as well. You think the Premier League title could be ours next time?
Well, the great news for any supporter who doesn't support Arsenal is that that they're not going to be competition for you for the next few years. So I'm pretty happy that he's staying.
Yeah, of course, we are in Champions League, and Arsenal is not, Andrew, so that's also a good news, right? But I hope that we have a better season, of course, this time round. Andrew, thanks a lot for joining us and giving all your ideas.
Hey, who's this we, by the way? I mean, which country are you from?
No, the two of them support Man U, and I support Arsenal. So they're ganging up against me.
I get that, but where is the we coming from? Why not Man U?
Of course, Andrew is born in Manchester and has been part of has supported Manchester United since his childhood.
And you are his friend, so it is we, is it?
No, I mean, see, we've been watching football for so many years. When you support a football club, it's like saying we.
No, actually, my son talks like that. We lost. I mean, like, where are you in the picture?
And that's the kind of love you have for the sport, right? Andrew, thanks so much for joining.